you have alignment of interest, a lot of good things happen in these businesses.
Today, my guest is Michael O'Connor, CEO of Broad Street Partners.
Mike, pleasure to have you today. How are you?
I'm great, Al. Great to be with you.
Thanks for taking the time, and it's a pleasure to have you. Mike, I think I've been very excited to have this because Broad Street, great company that's been built here, is a very different model and very unique to the market. And I think what I'd like the folks out there to learn is not only about you and your background and the great job you've done as the CEO, but how the model works and how it stacks up against the rest of the world out there, not only from a insurance brokerage perspective, but an M&A perspective, and the uniqueness of it, I think, is the thing that is most interesting to me. And everything you're doing, what you're planning on doing, short term, long term with Broad Street, and what you're thinking is going on in the marketplace at this time, because I think there's some things that you guys bring to the table are very different. Obviously, my good friend Brent Stone and Ethos, is now one of your partners here, and certainly I was very encouraged when he became a partner of Broad Street. I know Rick Miley, a long time, terrific guy, but you built a real good business, and I think the folks out there will probably know of Broad Street. Others that may not as well would love to hear all about it. So, Mike, I'm gonna hand it over to you. Why don't you give us a little background on yourself, and then dive right into Broad Street.
Sure. And Al, great to be with you again, and really appreciate the opportunity to talk a little bit about both Broad Street Partners and also just the industry. My background, in short, is I'm a New York kid. My dad was a New York City detective. My mom was a nurse out in New York, but I found my way to the Midwest to school and stayed, and have been out in the Midwest in Chicago. I call Chicago home for 25 years. So can no longer call myself a New Yorker, according to my dad. But I spent a dozen years or so at McKinsey & Company, and then about a dozen years at Aon, and have been very fortunate to be now at Broad Street over the last 3.5 years. And like you described, when I came to fully understand how the Broad Street Partners model works, just got really excited. And I'm more excited today than the first day I got introduced to it.
No, and the thing that's interesting with the model is, it's a conglomeration of a lot of very talented firms. You're a true hub and spoke model, okay, more so than anyone, because really what Broad Street is the holding company. And, I think the folks that started it, and I'm not 100% sure of the original investors behind it, I'm not sure they were even all insurance people, other than investors or idea people. And it's a great idea. It's taken off. I mean, Broad Street's very significant size, but you're a true insurance guy, obviously. That's your background, coming from Aon and whatnot. Why don't you tell the folks a little bit about the model, how it's broken up, the regions, what you look for, in your platforms and geography, and how it all works if you're not a platform, and how you build in certain areas.
Yeah, certainly. And maybe I'll start with, as you said, folks who know Broad Street Partners know this story, but not everyone does. And Rick Miley, who you mentioned, who's the founder and is still working with us every day, he's my partner, started this firm with the support of State Auto in Columbus. So, mutual insurance company. And Rick had the foresight to understand that the distribution world was changing. And this is over 20 years ago, and realized that certain independent agents were looking for support to grow. And Rick got the idea that State Auto could actually partner with some of these firms. And because they were independent, because State Auto is an insurance company, Rick had the forethought to say, listen, let's take a co-ownership approach. We're not going to own 100% of these firms. We're going to own a portion of these firms. And we want entrepreneurial, highly motivated leadership teams who want to grow. That's who we want to focus on. And that was sort of a guiding principle that Rick had in the early days that is prevalent and alive and well today at Broad Street Partners. And Rick had the good fortune of meeting the team from Ontario Teachers Pension Plan, who has a very large investment arm, a very large private equity team, over 15 years ago. And they partnered 15 years ago to actually support the growth of Broad Street Partners. And the model has been with that guiding principle of co-ownership and finding entrepreneurial leadership teams that are looking for support and growth. That's been the consistent theme throughout the firm. And as you described, from literally ground zero with Rick starting this firm with State Auto Support, it's been a tremendous growth trajectory. But again, built on the fact that we're here to support highly motivated entrepreneurial firms that are looking to grow, that find the value in being part of a family where they get benefits of capital support and growth support. But we're really largely betting on 100% those firms and the leadership teams that exist there. And so if you think about where we are today, the firm's grown a lot. And as you highlighted, the one change that happened in the last year is, we went out and found a fabulous set of partners to join Ontario Teachers. And that's where Brent Stone from Ethos Capital, along with British Columbia Investments, BCI, and White Mountains came in as investors in Broad Street. So we now have two sort of cornerstone investor groups to set us up for the long term to continue to basically drive growth in the business the same way we have over the last 20 years.
Well, at that point, when Brent and this conglomeration of other folks came in, was that the first liquidity event for the shareholders? Did you give liquidity to these hubs?
Well, our model is pretty unique, Al, to that point. The way we actually operate in this co-ownership model is our partners maintain an ownership stake. That's the same ownership we have. They don't own sort of Topco or Holdco company stock. They own local equity. Reality is our partners are always trying to grow and increase their shareholder base. So over time, they pass their equity locally from generation one to generation two. So when you think about liquidity events, our partners always have the potential for liquidity. If our partners want to sell any of their equity, literally, they can do it any day, and we're willing to support the actual process of doing it. So that's one of the unique attributes, Al, that I found. We are a private equity backed organization, but we have very long-term capital. Teachers has been with us for over 15 years. And the second part of it you just highlighted, which is we're not looking for an event. The reality is we're committed to these firms for the long term. And we both pay out a dividend on a quarterly basis to our shareholders, as well as provide liquidity whenever our partners need it. The good fortune is, and this in the industry, it's a fabulous industry. You've got highly motivated leaders in these businesses. The reality is they want to hold this equity. They want to grow their firms. And that's part of our model, which is if you look across roughly our 30 partners, we have over 900 shareholders at the local level, each in their own firm. And the reality is there's more buyers than sellers. These are firms that are growing, that have the potential to continue to double in value every 4 or 5 years. We have shareholders at the local level that are very focused on how do they build this firm over the next 5, 10, 15 years. And with it comes great wealth creation. And our model, again, facilitates not only that ownership at the local level, it pays dividends, and it'll also create liquidity when anyone needs it or when they want to bring new shareholders into the family.
Well, the interesting thing with that, and I always share this with anybody, any of these firms, private equity backed firms that, have a more distinct, event, timeline, as let's put it that way, is obviously the equity is only as good as the liquidity, right? At some point, it sounds like what you guys have done, and I'm familiar with it, but I want the folks out there to understand it, is you create hubs in different geographies, and they're super, super scalable shops. These are not small firms. You start with a large firm in a geography, and then you plug in smaller firms, but everybody's still like-minded to want to grow together. ABC Company becomes the platform. Company A that plugs into it first gets equity in that platform, so that they're part of that platform. Okay, and maybe there might be 20 platforms that you have around the country. I don't know how many you have right now, or whatnot. Maybe you could speak to that in a minute. But they're all doing the same thing, and really the liquidity comes by the perpetuation from the current platform owners to the others that are, let's call them the spokes, the hub and the spoke, getting the opportunity. That's where the liquidity comes. So the event that took place with Brent and company really was not a liquidity event for all. Okay, that those liquidity events could, like you said, could happen any day, all day. Okay, based on the perpetuation of the current leading shareholders. Is that accurate? Pretty much.
That's pretty much correct. And I think, Al, the way we think about this is when we, go out and meet a firm that's looking for a partnership, they're looking to bring in a capital source of some sort, whether sell themselves 100% or a portion, there's almost a self-selection process. There's a bunch of different models out there. And as you said, we're a little bit unique. The reality is what we're looking for is a highly motivated entrepreneurial team that's looking for resources to grow, that isn't done. They're not ready to retire and forget to tell somebody. These people are fully motivated, ready to go. Not only that, they've already started to think about the next generation. Who is the next set of leaders they want to come up? Because our point is we want to bet on the firm. We're not actually talking about Broad Street. We talk about the firm. So we need a generation of leaders who still have a lot of runway, but also are thinking about the next generation. And what they look to us to do as part of the family, as you said, is, we provide support to do M&A. If you want to continue to build your firm and you want to do tuck-in acquisitions, we're a great partner to help support people in doing that. Secondly, we want to help our partners grow organically. The reality is, as the family of firms we have, and we have 30 partners, 29 in the United States and 1 in Canada, we share best practices. Our partners work together to actually serve multi-jurisdictional clients. So they'll work together to show up so they have resources all across North America. We have over 9,000 colleagues when you add up our partners across North America. The reality is we want to help our partners grow inorganically and organically. And as you described, we're supporting them thinking about the next generation of owners they want locally and how do they pass equity from generation 1 to generation 2. And we'll help support doing that. So again, it's really just a matchmaking of, hey, what our model represents, got some unique attributes, but we're looking for entrepreneurial, highly motivated teams where we're a good fit. And if it's a good fit, there's a lot of great things that have happened. And as you said, if you look at the history since Rick founded the firm, the firms that have joined the family have grown exponentially. We have a lot of happy partners and a lot of happy local shareholders because they've worked together collaboratively to serve clients and to grow their client base. They've been able to do, tuck-in acquisitions where they acquire 100% of these local firms and bring in more content and capability and great people into their firms. And my job and the rest of the Broad Street Partners' job is to serve those clients. And our clients are our partners. And that means what can we do to help our partners continue to grow?
You're a unique model in the fact that everyone holds equity in the hub, right? So the one thing that you're different from the other private equity backed brokers, because everyone's looking for the same thing, Mike. I mean, everybody, the influx of private equity capital that's taken place over the last 13, 14 years has changed the industry drastically. Sure. No longer does and it's an aging industry in a lot of ways, although it's getting younger now because of this. But the aging out owner who, wants to get a ton of money and walk away is not attractive to anybody that's in a growth mode. So we call folks like you growth strategies. Okay. Right. But you want people to sell up, not sell out. Right.
Correct.
So the thing that really aligns everybody is the equity. That's the alignment to want to work together, cross sell, so on and so forth. But the big thing that's different between you and the others, which is the bulk of the others, are basically everyone holds equity in the overall, right? Where you only hold equity in your sub. Now, the question I have for you is, how do you feel that has played out for you from an M&A perspective? Because I know from our perspective, a lot of people our sellers want to hold equity in the overall because, obviously they're right. And in theory, these people are holding equity in the overall because if you did ever have a real event where Broad Street went public, okay, or Broad Street sold to somebody, the model to someone else or whatnot, they would all be able to, I'm sure, tag along, okay, on that. But how do you feel, with the model the way it is, with the longer term capital, how do you feel it positions you, to compete in a Sika Fletcher process versus, just you finding exclusive deals yourself, which is always the best thing. I'm sure, you'll look for that. Nobody wants to compete in our processes as much because they're very competitive. Okay. And whatnot. But how do you feel you stack up in those processes?
Well, I think, look, Al, when you do this for a living every day, and to your point, you're going to represent any firm as aggressively and assertively as you can. But the reality is you're also thinking about great fit. You're basically making sure that people get paid fairly, and that can be very high price, fairly, for the value they bring to the table, not only today, but the future growth. But you also want people to be happy. And the reality is, look, our partners are highly acquisitive. So we do a lot of transactions. If you read some of the league tables. So the reality is we're paying competitive prices. What we really focus on is, of course, we're going to pay for value in a business, or our partners will pay for value in a business today and in the future. But they're really focused on is their good fit. We're not going anywhere. We're going to be here for the long term. There's not an event, as we just, discussed, coming. So really one of the criteria is this combination, if we're going to partner with someone or if our partners are going to buy a firm, does it make them stronger? Does it make them better?
Right.
And obviously with that mindset, it's not about what's going to happen in the next year or the next 2 years. It's, does this make us better for the long term? And that's just a different mindset. And I think for us, we let the numbers speak for themselves. We do a lot of transactions. So we're obviously finding a way to actually, give people the value they think and rightfully deserve. But we're very focused on making sure that these people are wildly successful when they join us. And to us, that's growth after you come together. And we're very focused on that with our partners, which is, look, our responsibility is to make sure that our partners are positioned so that they can grow. And every time they think about bringing in a tuck-in acquisition, it's always with a focus to, we're going to have these team members and colleagues with us forever. And how do we make them successful? And, that's a great combination to have. And it's not like there's there's speed bumps people hit, there's issues that pop up, but that's the mindset. It's got to be, hey, we're not in here to make a quick buck, to, use a descriptor, but it's largely, does it make us stronger for the long term? And can we grow faster together? And if that's the case, it's a great combination.
Obviously, since people are holding their own equity, is there still distributions of the profits to the shareholders each year? I think that's a differentiator too that you guys have. Is that just at the hub level, or is that at the spoke level as well?
Right. At the partner level, yes. It's this is some of the genius that I had nothing to do with creating, Al. But when I saw it, I was like, this was genius. Rick set this up from the beginning, which was, listen, as you described it, equity is great and obviously a wealth creation vehicle for everybody, hopefully over time. But, I describe it as, for a lot of times, it's psychic rewards. There's no money changing hands. And Rick realized that and said, look, a dividend is not going to change anyone's life, but it reminds people that this equity is alive and well. And, cash flow in these businesses, as we all know, is quite good. We were very fortunate that this model was set up that we don't need to chase every last dollar, and we're going to pay out distributions. So we pay out distributions at the core level on a quarterly basis. And again, as I've lived with the Broad Street partners for a number of years now, everyone's focused on equity value creation, but the dividends do help. And as people take on, and buy equity at the local levels, generation 2 from generation 1, the dividends can help pay interest on loans we'll provide to allow younger colleagues to own equity. So it's a great self-reinforcing model that, again, brings to life the fact that ownership and alignment, as you said, in these professional services businesses, is the North Star. If you have, alignment of interest, a lot of good things happen in these businesses. And our model from day one, Rick constructed it with that in mind, and we're not going to change it.
No. And I think what the dividends, let's call them, or distributions do is, it differentiates you from a standpoint that every quarter, right, there's things coming your way. There's more money coming your way. Where, the other models, the any kind of, how do we say it? Any kind of value on the equity is when you have the event, right? Because there is not distribution. So it's very unique in a very positive way. And you're right. There's different strokes for different folks. And what you're doing has been wildly successful. I mean, the things that we try to do for Broad Street is, number one, try to find a platform for you in an area maybe you're not there yet. And, you cover it pretty good. How many platforms do you have right now?
So we have 30 across North America, 29 in the United States, 1 in Canada. And over time, I think now, the firm has a mix of specialty capabilities and different focuses across the nation, really, across North America. And we're open to all kinds of distribution businesses. Again, I think we all know this is a fabulous industry, right? The distribution side of this business is just a wonderful business. As you said, the economics are great. It's a people-driven, you just love the business. I think for us, it's, we want to find people, great businesses, but as I described, it's really the right leadership teams. We want folks that, again, have runway and energy and vision to build their business. They want to actually perpetuate and keep their name on the door and actually continue to pass this on to the next generations. They're looking for, as you said, as everyone is, resources to grow. How can I actually accentuate the things I'm great at, shore up some of the things I need to improve at, and get the benefits of being part of a larger organization and a family? We check a lot of those boxes. And those are the folks that we want to spend time with. And, and then they're going to have choices. These businesses, if they're strong performing businesses with great leadership teams, they've got choices. They get to choose. So it's really a matter of them understanding our model and us understanding their business. And then you see if there's a great match.
I think, one of the things that Rick and I discussed over the years is, he's been very clear on the scale you need to be a hub in a geographic area. And I know you got 30 of them, 29 in the States and 1 in Canada, which that's great because we're starting to kick around Canada a little bit too, which might be something we can talk about. But, I think the thing that's interesting to me and what I've said to Rick is, the diversification, I think that should come out of something like what you're doing is now to be more around the verticals and the niches, sure. Right? Sure. The riches are in the niches. I'm sure your hubs have certain niches and other guys, some guys do something well, other guys do everything well. Has it been primarily retail? Have you dipped into the wholesale MGA arena? I think one of the things Rick and I talked about several years back was had a pretty sizable surety shop that sure. to me, could be a, resource for your whole group, that this is a high quality, and it was about 15 million or so in revenue scale wise. Are you thinking about those things? Have you done any of those things? Is it primarily still retail, or are you starting to do things, wholesale, MGA, or any kind of these verticals?
Right. The short answer, Al, is I think, we're what we have in the family now, as of today, and we will in the future, these types of businesses. To your point, we've got to a size and a scale where we and have appetite to, our firms, have all kinds of specialties, large surety operations across North America. We have wholesale in the family now. So we're open to all these types of distribution businesses. And to your point, not only are these great businesses that are grow on their own, and these leadership teams are going to actually take them on a trajectory to continue to grow, but now there's a lot more collaboration in the family. And these partners are highly motivated and have set up a whole bunch of, rules of the road on how they work together. So it is an extremely collaborative organization now. And I say this from my past experience. This is the most collaborative group of partners I've ever worked with, and highly skilled. So to your point, you as you describe it, the riches are in the niches, I think is your description, or the niches are the riches. We'd agree with you. You need domain expertise, you need specialty capabilities to serve clients. And I think our partners have fully embraced that, and we're supporting them and continuing to grow that.
So are you finding that, the alignment of the equity is key, right? That helps everyone to work together. And since the equity is really held in the certain hub, are you finding that the different hubs are collaborating together? I mean, it still can share revenue. It's not. It's it still really helps the equity overall. It's just a little, it's not all aligned in one equity as like some of your others. But listen, Mike, we've sold, right now, and I explained to people that insurance brokerage is not just insurance brokerage. Okay. That for many years, if you were a wholesaler, you couldn't be a retailer, vice versa, because they thought it was a conflict of interest. Now, if you're not both, you're really not that competitive. Right. And we've sold anything that was being outsourced into some of these insurance brokers, not actuarial firms, auditing firms. Okay. Tax advisory firms, because one firm had a ton of personal lines. They thought they could feed a lot. I mean, anything that was outsourced and whatnot. So are you seeing collaboration between the hubs, even though there's different equity? Okay. You seeing that cross-sell work, even though there's a different equity structure? Or what does the breakout of Broad Street look like from a commercial to personal lines to employee benefits? And I'm sure at your size, you have to be doing, on the employee benefits side, a lot of the self-insured stuff, all that stuff. Do you do anything with captives? Yeah. I mean, you got to be doing all that. What's the split look like? Commercial, personal, benefits. What's that look like today?
Yeah, we're call it just under 60% commercial lines, almost high 20s on EB, and the rest is personal lines. And that's really focused on more what I call mass affluent and affluent. We have some Main Street personal lines business, but that's not really the focus. And to your point, if you look at the evolution of our partners over the years, we're doing everything you just talked about. We're large captive practices. Our employee benefits capabilities have grown tremendously. So, we have access to a chief medical officer. We have pharmacy coalition. Stop loss captives. We've got all kinds of capabilities, both on the P&C and the EB side. And I think what I've seen, as I said to you, is this is a highly, highly collaborative group. And to your point, although the equity is owned in each of the firms, there are a bunch of economic guardrails, so to speak, or reinforcing mechanisms we've got in place where people can make a lot more money by working together. So the reality is there's enormous collaboration around specialty resources, about covering different geographies within, in-region resources. So the partners are very focused on saying, hey, the reality is working together, we make more money, let's work together. And I think to me, in professional services, it's very hard to mandate anything. People get to make choices.
Right.
And what I walked into and what Rick and the team built here, Ken Kirk and others before me, was a highly collaborative environment. And they just reinforced what people wanted to do, which was work together to make more money. And sharing of best practices is absolutely, in the DNA of the firm. And part of my responsibility and the team's responsibility at Broad Street Partners is just to help facilitate that. We run 14 practice groups across both industry and geography. We've got specialty capabilities that cut across, just like any other professional services firm. People who join Broad Street, one of the benefits should be, how do I get benefits of scale, more capabilities, more access to resources? I'll give you an example of one of the things that we did years ago. And again, it was before I got here, but the team was quite thoughtful about this. And I'll simplify it a little bit, but we don't ask partners to change policy management systems. If you come in running Vertafore Applied, stick with it. What we do is we rip the data out every night. So at midnight, we take everyone's data out of their system and run it and put it in the data lake. We have over 7 years of transaction level detail. And of course, our responsibility for our partners is, churn and burn, provide data and analytic and insights that they can act on. So whether that be, churn models, propensity to buy models, cross-sell opportunities, that's the benefit of being part of a larger organization. Can you benchmark on a particular industry and client size? Can you think about what the propensity of that client, if they have 3 lines to cover, what the next one is? We can do that. So that's part of the benefits of joining the family, right? You come into the Broad Street family, the partners are collaborative and say, hey, listen, let's contribute the data we've got. You guys actually can then provide it back to us in a more meaningful, insightful way. And ultimately what that allows you to do is, win on the street. You're going to win more clients when you show up with more insight. And you don't want just your insight from your local geography. You want to draw from wherever you can. And that's part of the benefit of being part of the Broad Street family.
Well, no, I appreciate you saying that, because that was kind of next lead question, because we've been super involved in, helping a lot of these firms, grow. Okay. And we invested in 7 different ones and whatnot. And, we don't influence our sellers. I've said it a million times on these podcasts, to go with any of our investments, just to be real clear, as always, for all those out there that focus on that. Okay. But, in getting involved in these events, okay, the big buzzwords are integration, okay, because they want to make sure that you're an integrated model, okay, and yours, what you're saying now is you are integrating certain things, right? I mean, do you have like regional leaders? Do you have like a national employee benefits leader? Even though you're hub and spoke type model, so and so, you have practice groups. I hear that. But the integration part of it is key. And of course, that all these things, everyone knows everyone's acquiring, right? They know you're getting good talent and, good firms, and, it's all about the people. It's no different here as it is anywhere else, Mike. I must tell you. But, is this creating the organic growth? When you put good people together, the cross-selling, certainly your model is totally set up for economies of scale. Okay, because it's a pure hub and spoke model. You're looking at how you can cut, combine expenses and so on and so forth. So, do you feel that this is if you did have to go out and have a public offering down the road, right? Which, that's going to be key. And, obviously, other than having the right debt structure financially, the certain leverage multiples and whatnot. Do you feel that even though this is a true hub and spoke model, you are creating the integration that's necessary for a possible larger event down the road?
Sure. So let me start by saying, look, we have 2 great communities of supporters, and we're a private company and enjoy the benefits of that. And especially in this day and age, we like being a private company. So we really just focus on, when you get back to your question, which is around integration, I flippantly say, so it's the New Yorker in me, Al, I says, can you give me a definition of integration? Because we all joke across this industry, there's 1,000 different definitions. I think what our partners have done over time, Al, and I just embrace this, is, these are sophisticated firms and leaders within them that have grown these businesses. When they look at, integration across the Broad Street Partners, they're all different firms. They're all driving slightly different strategies, but they say, hey, where can we work together to create value? Where can we work together to create value? And I used one example, which is, hey, when you think about, data, there's great value to bringing that together. The second thing that I've been really impressed by with our partners is they say, hey, we're going to think about integrating, cooperating, collaborating, whatever integration really means, where it creates value. The other is where it reduces risk. Because again, these firms are at a place in size, Al, where, you got to love it. They wake up every day thinking about growing. And one of the things that's going to prohibit you from growing is when you have issues and challenges and instability. So we have very sophisticated partners that think about building, a business that's, built on bedrock so that they can double every 4 or 5 years, that they can actually continue to grow organically and inorganically. And they're going to take steps to work together to reduce risk. And to me, that's really when you think about, thinking about the benefits of any organization, but certainly when we think about supporting our core partners is, listen, we're going to collaborate and facilitate collaboration amongst our partners because they see the opportunity to create value, or they see the ability to work together to reduce risk. And to me, that makes a lot of sense. That's just literally common sense. And you go area by area by area and say, hey, if it actually creates value or reduces risk, is there a way we can collaborate?
And I think, and I agree with you, there's a lot of loose definitions of a lot of big buzzwords. Integration was always, go back to when, Greg Williams really got out there and nationally with Acrisure, that was a decentralized model was the hot thing, right? It was, keep the least change of anything. Well, that's changed drastically from the investor perspective. And it's also changed drastically from the investor perspective in, what the investors are looking for now. Okay. We saw that, and, maybe a good segue into, what's gone on in the last couple of years. Cause, there's firms like Risk Strategies, arguably one of the best privately held businesses in the country. Mike Christian, great friend of mine, did a good podcast with me several months back, and he was the guy that was ahead of his time with the niches. Okay, he built that whole model and sophistication. Went into from being a real good commercial guy to then employee benefits. He brought that in, and then it was all from retail to wholesale and retail and all this stuff. And went out to the marketplace and realized some things that I don't think anybody expected, to where, now he's part of a hell of an organization with Brown & Brown. We know the Brown folks very well. It was a great outcome for him. But I don't think he anticipated when they went out to the market that he wasn't going to try to stay private like you guys are yourselves. And it's unique, what you're doing. I think a lot of that has to who your investors are. Okay. Because, the traditional private equity, they want their money out 3 to 5 years. They want the liquidity for their shareholders, which is creating the events and so on and so forth. So it's interesting, because you're the true hub and spoke model. The definition of integration for those investors is it looks like one company. It doesn't look like a bunch of hubs and spokes. It doesn't look like a bunch of different names. And I'm not saying they're right or wrong, Mike. I'm just telling you what would we have to get involved in these, well, let's call it recapitalizations, which we've done a dozen of them, soon to be doing a few more. Those are the things that these investors look for. If you can even get one sponsor, if you're still small enough to get one sponsor, to basically do this by itself anymore. So the world is changing. I think you guys are so unique, and I say it positively in many ways, because you've been able to sustain this growth, and you're doing pretty much everything that everybody else wants to do. But as my partner Mike Fletcher calls me unconventional, you're doing it a little bit unconventional, okay, compared to everyone else. And I kind of like that, because that's what people tell me I am. I always say I think maybe I'm the only conventional one out there, okay, and everyone else is unconventional. Because I did this, we bootstrapped this thing for 38 years, and obviously got to the top of the table on everything, which I'm very proud of. But you're only as good as the people around you. But it's very unique that you say that about what's the real definition of this? What's the real definition of that? I'm just, very, very, very much, enamored by what you guys built, and in a very positive way. And it's been awesome. So tell me, you're out there now, you came over from Aon, you've been here 3.5 years. You're in a great spot. You guys are continuing to build along the lines of what you've done. From an M&A perspective, how do you see, how you stack up competitively wise, but, Broad Street, what's the next move? Is it just going to be continuing to roll like you are? Is there any kind of long-term exit strategy that, is going to get all these people at one shot, a big payday? Is there any thoughts around that, considering what you're seeing in the market, what happened last year with Assured, with Risk Strategies, and soon to some others that are getting of certain scale?
Right. Yeah, Al, I think we're just a different, as you said, we're different. We don't need an event. We don't need some big thing. We actually are in a fabulous position. As you said, we've got, with Ontario Teachers and their 15-year relationship with us, we're extremely privileged to have them. We brought in Ethos, BCI, and White Mountains. Again, we couldn't be in a better position. And for our partners, they have liquidity whenever they want. And that is truly unique, as you highlighted. And our biggest challenge is we got more buyers than sellers. So, it's a great position to be in. And I think if you step back, our partners, and this is probably, again, I'd say this across all the great firms you are mentioning in our industry, it comes down to, do you do great things for clients, right? Who are the clients of the firm today, and how do you get the future clients of the firm as quickly as possible? The second is, are you doing great things for colleagues? Are you creating an environment where people can grow, where they have opportunities to advance, where you create, a great work environment for them? And third is, do you have a great economic engine underlying the business? And we're very fortunate across our 30 partners, Al. That's what our partners wake up every day and they say, we're going to make sure we take care of our clients and go find the next client. We're going to create as, supportive and as, positive an environment for our colleagues as we can. And the third one is they are absolutely focused on driving growth and economic value creation. And to me, the industry as a whole is a wonderful industry. The distribution side of the business is great. But when you find a group of partners that are like-minded like that, you're in a very privileged position. And we have these, long-term oriented, highly supportive, very, sophisticated investors behind us who, absolutely understand the model and say, keep it going. So we look and go, what Rick built in the beginning had a lot of interesting attributes to it. We're not going to change them, and we're in a privileged position today. And, I always tell Rick, the proof is, do we have happy, highly motivated partners? And, that to me is, in a professional services firm, that is a lot of the way home. If you can get that done, if you have happy, highly motivated partners, good things are going to happen. And we happen to all be in a great industry. There'll be ups and downs, softer rate environment, harder. But the reality is this is a wonderful business.
So you're not, in summary, and you're kind of a little bit like from a capital perspective, like USI. USI's got long-term money, right? And, USI was public at one time. Hub was public, both excellent companies, really well run, very, very good companies. They have super scale now, but they're not, rushing to go public either. Okay. You got to prepare to go public. Right. It takes years to do it right, to get ready to do it. But it doesn't sound like you're even thinking or concerned or any effect of what's gone on in the market, because you feel that you are separated from that based on your model with the investors you have. And listen, I've done 5 deals with Brent. Okay. Brent Stone. We've done 5 different transactions over our career. He's a good friend. He's one of the smartest private equity guys out there. He's done very, very well. But it sounds like, in summarizing what you're saying, you guys are very comfortable in your own skin. There's no urgency to do anything because you can create events on a daily basis for people. Okay. And you're not concerned about what's going on in the marketplace, which, a lot of what's going on in the market, you're watching now the publics, traded down from a multiple perspective. A lot of that is, I think has to do with the what everyone's thinking about AI, and everyone's got their own view on AI. We've all been hearing this industry is gonna, someday gonna go away from having people, and it's all gonna be, technology, which will never happen. I've been doing this 38 years. I've heard all the different versions. I'm a believer this will be relationship driven, Mike. Forever. Maybe it'll make things more efficient, because I think the insurance industry was behind in technology for a lot, but it sounds like you're really comfortable in what you're doing. It sounds like that you're very bullish on continuing to do it that way, as you should. And I say it all once again very positively. And maybe you're a little bit more bulletproof than some others that just follow the typical private equity backed model, who might be a little more concerned based on some of the things that have happened over the last couple of years.
Yep, that's a fair description. And again, I think the difference is, like everyone in this industry, you can love the model you're in, which we do. We love the partners we've got, but what we're really focused on is, how do we continue to grow and build these businesses? And, we're in a position today where, we want to lean forward and take advantage of, the opportunities that present themselves. And things like you said, if you're not adopting AI, if you're not providing to, people that are client facing or in the middle or back office, if you're not providing them technology and process improvement, you're not doing your job. And we think of it as, part of the benefits of being part of the family is we can provide scale that a smaller organization couldn't. So the ability to invest more and, replicate best practices and things like that, that's part of the benefits of what we've got. So we've got to take advantage of that. Well,
listen, I will tell you that, I'm very impressed with what you and Rick have done. And certainly from our perspective, Sika Fletcher, we want to continue to do as much as we can with you to help you continue on this journey. I think I've covered pretty much everything I wanted to cover today. If there's anything you want to still cover, please speak to it. Otherwise, I thought this was terrific, Mike. I'm very, very excited to continue to work with you as a firm. and individually, and continue to build our personal relationship, because I think you're a terrific guy. It's a great business, and I'm sure you're going to success is going to continue for a long time, and I'll be happy to watch it and continue as long as I'm going, and I'm not planning on going anywhere anytime soon. Okay.
Nor am I.
At least
Al, I appreciate the time to be together. Yeah.
Well, listen, I appreciate
Exactly.
I appreciate you taking the time today.
Al, thank you. I enjoyed it. For our notes, like I said, what Rick Miley built at Broad Street Partners, what we want to keep building together, the two of us and the rest of the team. We're highly energized and excited, and we appreciate the partnership and connections with you and your team, and look forward to many positive things in the future.
Absolutely. 100%. Thanks again.
For more information about your unique situation, please contact Sika Fletcher or visit us at www.sikafletcher.com. All opinions expressed by the host and guests are their own and are not necessarily those of Sika Fletcher. This podcast is for informational purposes only and should not be relied upon as professional advice. Sika Fletcher employees and clients may have positions in the firms discussed in this podcast. Any information provided is subject to change and does not constitute an offer to purchase or sell any financial product. Sika Fletcher LLC does not underwrite securities, nor advise on, nor affect transactions in securities for the account of others.